It's very, very important to earn your stripes. Never approach. No, don't wait until you have your own deal. Get on somebody else's deal as a KP, sign
Right.
with them, and then go with resume with something on your resume when you have your own deal, is what I would say.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hello, everyone. Welcome to the Real Estate Pros Podcast. I'm your host, Micah Johnson, and today I'm joined by Venkat, who's making some serious moves in real estate investing now for a little over 2 decades. Venkat, welcome in, man. Glad to have you.
Hey, thanks for having me, Micah.
I'm excited, man. I'm excited for our talk today. Glad that you're here, because I think we're getting ready to have a real conversation about the multifamily world, what really happened, how you survive in it, what you do. And you have enough experience that you're not just seeing this through one lens. You're seeing this through a long lens of real estate. And if you've been in this game long enough, everyone knows it's a cycle. We're living out cycles. Different things trigger it, but it's kind of the same one, and it happens in different areas of different assets. It's just like who's getting hit by what at any different time. So multifamily is one that, for our listeners and viewers out there, if you're not familiar with it, they've taken a real good beating since 2022. So I'm excited to dig into this conversation because, like we were talking about pre-recording, this is what brings the best to the top. This is what really gets you sorted out. And if you're good now, you're fixing to be great. That's what it sets you up to be. So let's dig in, man. Venkat, tell some more about yourself. For those that don't know about you yet, what's your main focus? What's your business look like today?
So I'm based out in Plano, Texas, just north of Dallas, suburb here, and been here since 2004, so like over 2 decades. And what I do right now is multifamily ground-up development in core markets and in very high-income areas, right? So that is the tenant I'm targeting. Somebody who makes about the median income of the country. So about something like $80,000 to $120,000. That's the
Okay.
tenant profile that I'm seeking, and I'm building properties accordingly. In the past, I used to do B and C class properties, work for housing, and all that. Don't want to do that no more. I just want to graduate to something like this. And I did try to buy existing properties because I used to do a lot of acquisitions and operations. But you cannot buy desirable properties at a decent cap rate where you can make a buck after that and for your investors. So that's why I became a developer, so that I can build myself, so that I have the margin for me and my
Right.
investors.
Right.
Yeah,
You get in there earlier, man. The earlier position that you have in the deal, it only gets better and better.
absolutely.
That's the goal of real estate. So
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Okay, a couple things I want to dig into real quick. One, I loved your word there, you graduated, because that's something I like to dig in with folks on this show is you may not end up where you started in real estate, and that's completely fine. It's a huge umbrella. I'm not where I started. It's completely normal. Just flow with it. Like let it bring it out of you. So I love that term that you brought up. And then tenant profile. We're going to dig into that here soon because that goes along with graduating is understanding everyone's not your customer. It doesn't matter which one yours is, but just know which one it is because you have to know if you want that. I don't want to say it in a weird way, but lower end rent customer, that class you're talking about, luxury rent, like there's all these different ways to target people. As you graduate, that gets important. But take us back for a second, man. How'd all this get started? What led you to where you are today?
So I left, I'm originally from India, South India, and I came here to do my master's in electrical engineering back in 2001, right after 9/11, December.
Wow.
So it was a little tense at the time.
Yeah,
So I
say
came
the
and
least.
went to University of Alabama in Huntsville. So they have a very good electrical engineering program. I did my master's in with specialization in chip design, VLSA chip design, and all that. And after that, quickly I realized that all the entry level jobs are in India, China, Taiwan, and all that. Right? We lost our chip industry, right? So I got a degree,
Right.
but no entry level job. So looked for a job for 6 months, couldn't find anything, and ended up in IT. Right? Totally different from what I have done and spent about 14 years in my IT career, um,
Okay.
2004 all the way to 2018, right? But in 2007, I started buying single family homes. I can't sit still. I need to do something. So I wasn't
Right.
doing it to solve. I mean, we were getting six figures back in 2004, right? Me and my wife. So we were not hurting for money or anything, right? So
Sure.
uh, yeah, it's just that I want to do something. I
Right.
got a dog, okay, and then I said, well, I need to do something more, you know, and that is how accidentally I entered single families, and that is the time they were selling these foreclosures, right? So
Right.
picked up 3 foreclosures quickly in 2007 and started operating. And then work got busy. And then the bearish, my God, anything to do with a single family home or a mortgage or a real estate in general was bad news for 2008, 9, 10, 11, 4 golden
Right.
years.
Right.
And I mean, there's nothing, no good news, right? I mean, 2011, we had a double depreciation under Obama. And I mean, I just sat out of it, but I still hanged on to my 3 properties, but didn't acquire
Gotcha.
anything. And they were practically giving away homes, right? You can buy them for credit card kind of a prices, right?
Right.
But I missed that. But in 2012, I clearly saw that, the tide has turned. And the way I knew it is, the uh, people who sell these homes like off market and all that, they start bothering me. They stop calling me, texting me, and all that. It's like something happened to you, right? Why are they not calling me anymore? Because they don't have to, right? Things turn.
Right.
So I quickly picked up, and then I bought about 20 homes after that, 2012, 13, 14, the 15, a couple of them. So it's all with my money using Fannie Freddie. And by 2015, I was generating about $10,000 per month cash flow after taking out mortgage, PITI, and 15 cents on a dollar collected rent set towards maintenance. And there was plenty back then.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Now I
Right.
don't think so, but back then it was enough. So I was bringing $10,000. I felt really accomplished. $10,000 was a lot of money.
Right,
Actually,
man.
side income. And by 2015, I was like, you know what? If I ever get laid off, or my wife, or either both of them get laid off, that's fine. I mean, we can live on this $10,000 per month. But then again, I just can't stop, right? I mean, they said that no more loans for you. 20 loans is cut off, right? The Fannie Freddie loans. Before 2008, there was no limit, but after 2008,
Yeah.
they limited it. Then I said, well, I can't scale no more, right? I mean, that is when I entered multifamily. So in 2016, I started buying. I quickly find out that I don't have enough money to buy 100 unit. So I started
Right.
syndicating. My very first raise was $1.2 million. It was a $3.5 million property, 100 units property in Norman, Oklahoma. That was my very first one. I tried my best, but nobody would trust me and award me a deal. Brokers,
Right.
I mean, have you ever done a deal? Like, no. It's like, okay, then, well, move along, right? So I needed to prove myself by stepping outside Dallas, go to a less hot market like Oklahoma, and prove myself. And then my second deal was 120 units in Phoenix, 3 months apart. And then that gave me the permission to come back into my own market, Dallas. And people say, okay, you close a couple of deals, and they gave me 300 unit. Okay, go close it now. So
Right.
my third deal was $15 million. So it's a 3.5 million, roughly $6 million deal, and 15 million all in 1 year. So
Funny how
quickly,
that works.
yeah. And I was able to raise money, arrange debt, Fanny debt, uh, you know, I did all that. So it, one thing led to another, and I had about 3,500 units in 4 years, about $350 million portfolio that I have set together. I said, oh, you know what? I slapped a 12-year Fannie Freddie loan on it, a lot of IO period and all that. You know what? I'm going to just put my feet up and smell the roses kind of thing. Yeah, not, it didn't work
No.
out that way.
No.
And then the
None of
COVID
that
rolled
fits
in.
your story.
These are all 60s, 70s, 80s built properties. Their income levels range from about $40,000 to $60,000 range, right? That's my tenant profile, and things were fine. I was sending checks to investors. I mean, everybody's happy. And then the COVID rolled in, right? And 2019 they started increasing the interest rates, so we quickly felt pinch in the economy, but we were okay, right? We were making things work. But in 2020, when COVID rolled in and federal government has said that you cannot evict people and all that, all hell breaks loose. 20% of the people stop paying rent. And that dawned on me, is like, look, these folks, they're hand to mouth, they're paycheck to paycheck, right? On a good day. And
Right.
something like this happens. I mean, I'm on my own. I still have to pay my employees, payroll, utilities, and everything. And I have to pay for his water, but I'm not allowed to collect rent from him. Or I'm allowed, but I cannot evict, right? So
Right.
that quickly dawned upon me and said that, look, this is not the tenant profile that I would want to stick with. And that is when I decided, you know what, I have to sell everything, the first opportunity I get, and then restart with Class A properties is what I thought.
Right.
And I had a lot of experience, because even single family homes, I was writing leases, I used to do inspections, and I used to arrange service calls and all that. I used to do it myself. I mean, there are plenty of property managers, but what dawned upon me is they won't give the same day service. I used to have tenants for like 10 years, because I take care of them, me personally,
Right.
nobody else,
Right.
me. They text me with the issue and the picture of the problem. I forward it to corresponding service provider, and that person talks to the tenant, set up a time, email me an invoice. I write a check and put it in the mail in the weekend. Nobody talks to anybody, but I provide same day service.
Right.
And I did for 20 properties. So I kind of got a view into people's lives, right? I mean,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
How they live. I mean, how is their income? How it's when it's not stable, or what will happen. People can get laid off and all that. So then I saw much more closer these BNC properties, how they live. And they see what happened was, like, in 2012 onwards, they really started this quantitative easing where they print a lot of money. People like you and me know exactly how to get our hands on that money. We go to the bank and, we get money and we invest, we build assets, we do well. But an average Joe, all they have is debt, right? And their
Right.
dollar is losing purchasing power because we're printing just way too many dollars. And that's why assets appreciated quite a bit since 2012, because at the federal governor at that time, Bernanke, he figured that's the right thing to do to get us out of the doldrums of the 2008 to 2011 recession. So that actually worsened the wealth inequality. It became really worse for them.
Right.
And then COVID, the money printing which came after COVID, it really sealed the deal for them.
Right.
So the bottom 60% of America, all they have, I mean, even recently, Scott Bessent, our Treasury Secretary, is saying the same thing. Like, look, the bottom 60% of the people, all they have is debt. They don't own stocks. They don't have assets. They don't have Bitcoin. All they have is debt. So we want to lower interest rates for them to give them some relief. That is what they're saying. You know. So that used to be my tenant. If they're not doing well, how will I do well? How will my investors do
Right.
well? That dawned
Right.
upon me and said, you know what, scram. And then in 2021 February, the snowstorm rolled in. Oh my God! I have about a 350 unit property in Irving, Texas, near the airport.
Okay.
You should see. And our properties are not built with that kind of insulation, not especially in back in
No.
70s. So I don't know what happened, but the sewer collapsed and then pipe breaks like there's no tomorrow. It took like 6 months to put it all together.
Wow.
$1.5 million for one property. And the insurance fight you try not to pay because they got slammed with everybody. They're trying to survive
Right.
it.
Right.
And I say, you know what? I was right. I mean, it's not just the tenant, even these assets, right? I mean, they're tired
Right.
and it's so costly to fix anything these days, right? The labor and all that, because that older generation with good work ethic and all that, they left the workforce. The young ones came in. It's not the same way to play with them, right?
No.
So I put it all together. I just decided, I don't want to overstay my welcome here. So thank God interest rates were super low, and then I rolled them all up and just sell them as portfolio. Um, Still sold them separately, but to the one buyer basically.
Gotcha.
And then around a $350 million transaction, September 2021, it was done. And then I started
Right.
looking for, where can I find Class A properties? They're everywhere. But the problem is they were selling, believe it or not, 2, 3, 4 cap rate. I just don't
Right.
want a new property. I want a newer property in rich locations. Let me
Right.
not ambiguous about it. I need to be in the rich areas where housing is so expensive that they would live with me, even though they make $80,000, $100,000, which once upon a time was good
Exactly.
money, but not anymore, right? You cannot buy a home. I mean, because people stop building these 150K, 200K homes completely. Like in Dallas, if you want to buy something, I mean, they all started like if it's like north of Dallas, nicer property, 400K now.
Right.
Right? I mean, there's no 150K property anymore, right? So I want that tenant who makes good money to pay me my rent, but I don't have to chase them down. Probably they'll put me on ACH draft, right? So
Right.
that's the kind of tenant I was looking for. But if in those areas, if you want these Class A properties built after, let's say, roughly 2015 or after, they were trading at 3-4 cap. How can you make money at 3-4 cap?
Right.
So that quick,
It's tough.
so basically, the mantra was flight to safety, right? Flight to quality. Flight to quality was the word. Everybody wants quality now because whatever I described, maybe they couldn't articulate the way I did, but that is what's happening. So everybody's running away from that older product and that weaker tenant class. financially weaker tenant class. So
Right.
that's why everything is trading at 2, 3, 4 cap. And I say, you know what? I need to build myself. Well, I never built anything back in 2020, by 2020. So that is when I partnered with somebody who have been there, done that for decades, because I need that experience. I mean, and I need it
Yeah.
now. So I did my
Well,
first.
less than one taught you that. Pause right there. Like
Yeah,
you were going through the fact that when you start to do those bigger deals, what you went through with those folks, that's not abnormal. Like no, not many people want to be your first one, especially in a market that's popular. That's not.
mhm,
They're actually trying to close, right? And it's when you take that step into the bigger world where you're talking about when a million doesn't sound like a lot anymore, right? Like when you start to get into that world like that, it's different. It's like the game changes a little bit. The conversation changes. You're not just talking to mom and pop no more. You're talking to professional
big boys. Yeah,
companies. They understand what they're doing. Everybody's a professional in the transaction, or at least they should be. Caveat.
absolutely.
That's where it's way more business like, and you had to go do that, go find it outside in a different market. I have a friend went through the same thing. He had to go get like piggybacked onto a deal so that his name was attached to a deal. But the fact his name was attached to it let him go to the bank and borrow money for his own deal.
Yeah.
Well, what's your proof? Here, this is my proof. Oh, those are two good investors. You're on there. Perfect. Here we go. Now you're running. And that's not something you normally deal with, especially in the single family world. That's a unique problem for someone that might be in that right now. How would you help them get through that mind space? What do they need to focus on?
That is exactly what I did. I skipped that part in 2015. I got approached by a couple of people for an investment, and that is what led me my mindset transition from single family to multifamily. But I was their key principal. So Fannie Mae, let's say if you want $10 million of loan, they expect the GP to have general partner to have a $10 million net worth and 10% of the loan amount as liquid. Like people
Gotcha.
usually have net worth, but liquidity is where people have an issue. So on that particular issue, it was about $18 million loan. So they needed 18 million net worth and some liquidity, 1.8 million liquidity, and the GP didn't have all of it. So I signed for that on a Fannie Mae loan. And that is how I earned my stripes. Now, next time in 2016, when I went to Fannie Mae, I'm not no stranger to them. They know me from that deal,
Exactly.
right? So they were the GP. I was an LP slash KP kind of thing. I guaranteed the loan. You wouldn't do it willy nilly for anybody, right? I know the person. I did my due diligence,
Right.
trusted their capabilities and all that. And then that I did 2 of those deals like that, one for Fannie, one for Freddie. So when I put that as a resume, because the worst thing that you can do by approaching an agency is like with an empty resume.
Mm.
Single family doesn't count. It's very, very important to earn your stripes. Never approach. No, don't wait until you have your own deal. Get on somebody else's deal as a KP, sign
Right.
with them, and then go with resume with something on your resume when you have your own deal, is what I would say.
And it may like you may have to swallow a little bit of a pill there, but that's literally how you do it faster. If you it's the I say this a lot. The process is the shortcut in real estate. Like if you fight the process, it's going to
No.
take you way longer. If someone will show it to you and you understand it, follow it, you get wherever you want to go. And it's just the way it is. This is a team sport, especially when you're getting in. Nobody got anywhere alone. Nobody. Everybody gets there with other people. And like you're talking about, it's not just random. You didn't sign random paperwork. This isn't gambling. This is investing. It's done with as much data as possible. That's why one of my favorite quotes is Deming's quote, and I always butcher it. But if you don't have data, you're just someone else with an opinion. I don't care. Like
As simple as
what
that.
are the numbers? What's it actually say? How you move forward? So now I kind of cut you off in a little bit, but now you're moving towards new development, right?
That's
Like you
right.
wanted that higher class product. I want to talk about that a little bit where it makes sense to shift to an area, especially in a market like we're in, where I don't want to say this negatively, but rent's a priority. It doesn't get tossed out. Like when things get quote unquote
Yes.
hard, paying for your rent isn't the thing that goes away.
Somebody who
And
cares about their credit, somebody who have plans for their life,
exactly.
that kind of thing.
Exactly. And it's, man, you mentioned it, like, market timing is interesting. What we go through, like, we just happen to be alive for right now, for what it's doing right now. That's literally it. Like, it's not luck, it's not karma, it's not anything. This is just when you're alive and this is what's going on. And we watch and go through it. And like you were talking about, I mean, there's been a wealth divide happening for a little while, but it got exacerbated in time periods where folks that knew what to do with money did what they did with money, and folks that didn't understand how it works, they just took on a bunch of quote unquote cheap debt. And it was the opposite. And that, like, the actions they took themselves are what separated. And I mean, it's as rich dad as poor dad as it gets, honestly, when it comes to the book that led most folks to real estate. But it's none of our fault. No one made anybody make their choices. And when it comes to living in a market like we're living in, you got to make smart business choices. The point is to survive the market. What gets you through? What takes you to that next step? And that's the shift that you had to make. And that was one of the things I wanted to nail on here was multifamily had to pivot. You had to. It did not let you just stay the same. And your pivot was towards, I want really good properties with really good tenants, and the best way to afford them is to build them. That leads us
That's it.
kind of in this next part. So what has been the biggest shift for you there? What have you had to learn? What have you had to adjust? What's that step look like?
Yeah. So, around 2018, 2019 is the time when I really started to understand the money, right? I had no idea how money gets printed. I mean, like, can you print anywhere, however, how much you want? I mean, I have no idea. So that is when I started to understand the M2 money supply, how our regular banks actually print money into existence by issuance of debt. Federal Reserve prints some money, like coins and things like that, and currency notes like that, but that amounts like 5% of the money. And then how we used to have $15 trillion of money supply. It took 250 years to get to $15 trillion. And then suddenly COVID happened and we printed another 50%. Just
Wow.
imagine that. We jumped from 15 to 22 in 2 years. And yeah, it's even worse. Like, if you see, before 2008, we used to have like $4.5 trillion. Let's call it $5 trillion money supply before 2008. And then by the time COVID gets, we got tripled 5 to 15. So that is why cost of living crisis is happening now, right? Because it's just so much expensive, everything, because we are printing way too much money, and an average Joe cannot double and triple their salary in
Right.
line with the money supply. If you are not able to double and triple your income in the 10-15 year period, you cannot keep up with it. You have to make do with
Right.
less. Instead of eating 4 eggs a day, now you eat 3, then maybe 2, then maybe 1, then after that maybe none, right? So that is the course we are in. And this is all started in 2001 with the 9/11 wars. Until then, I mean, Clinton gave a balanced budget, and federal debt was so small, our M2 was very low, and we started printing money because it was war, right? 9/11 wars, we got to go deal with
Right.
it. Inflation, will deal with it. National security is more important. They came and knocked out a couple of our towers here. Come on, right?
Right.
So then they were expecting inflation, and inflation didn't come. And they were like, what? So economics books are wrong? So they printed some more. Nothing happened. 2008 rolled in. They printed a lot more. Nothing happened. Oh, you know what? We can print how much our money we want, and there's no inflation. Something changed. Even economists didn't understand why that happened. In the retrospect, we know why. Because NAFTA, because China, outsourcing, internet productivity, all these things are productivity boosters, right? Makes things cheaper.
Right.
So our printing money and things getting cheaper balanced out, and we were able to print our way out of all our problems. And then COVID is when we bought the farm. We printed way too much, like
Right.
50% of it, right? So when I understood all these things, I quickly understood that, look, we gotta hold hard assets, right? That is how I went into, apartments and all that. And So when I approach development, right? So I see what is happening here, right? So you can, let's say it costs you $200,000 to build an apartment. In about 10 years from now, it's going to cost a whole lot more.
Mm.
The reason is they're going to print way too much money. How do I know? I can watch it. I mean, you just type FRED, Fred, M2 money supply in Google. Just pull up the first, that's the Federal Reserve's M2 money supply. You can see it like a hockey stick, right? It's going like that. And it's going to get worse and worse. I mean, everybody's doing it, right? Europe is doing it. India is doing it. China is doing it. I mean, that's the way people wants to uphold their standard of living. But
Right.
even when you're not making enough money, but printing away, right? And nobody wants to pay taxes, right? That's another thing. We want all these good stuff, we expect a lot of things from government, but nobody wants to pay taxes. Well, how are you going to do it, right? So all these things. So that is the thought process behind, you know what, this is a hard asset, right? This is a hard asset. It's going to cost you more to build this newer property in a good location, because once the land is gone, I mean, where are you going to get from
Gone,
there,
man.
right?
Ain't no more earth being made.
There you go. So that is why I chose Frisco, north of Dallas. And then Frisco is where the Cowboys headquarters is. There is something called
Mhm.
$5 billion mile, high paying jobs. It's luxury and all
Okay.
that. Okay. And then Salina, which is just north of Frisco. And then I have a couple of properties in Round Rock, Austin, and then a property in Kyle, Texas. All incomes, the median incomes in that area is about 140,000. So that
Okay.
is where I focused. Like, this is where I'm going to get my tenants, right? So, and my very first project was in a suburb called Princeton. Again, this is all North Dallas, and 156 units. We broke ground just after COVID broke out. Nobody stopped us. We kept working. So we exited that in 2 years and 2 months, from groundbreaking to closing the sale. Um, it was only 35% occupied, but the buyer said, we'll pay you 4 cap, as if the property is already 95% occupied. Well, what's the urgency? Well, they started jacking up the rates in March of 22.
Right.
So this guy said, you know what, I'm not going to wait and find out. I mean, you proved enough. A third of the property is already occupied. I want to close it right now. So take it. So that was
Deal.
the vision at that time, right? And then I did a 338 unit property in Kyle, Texas. So I already built it, suffered through inflation, but still delivered it on time, on budget. And I'm waiting for the better market conditions to sell. There's nothing much to do on the property.
Right.
And then I did a 25,000 square feet retail project in very, very affluent area in Houston. And then now I just broke ground on $100 million project in Frisco downtown. And I have 3 more projects, which is 80 million to 100 million range. And again, if you think about it, these are not itty bitty units, right, properties, right?
No.
I'm targeting institutions, pension funds, insurance companies, right? In good olden days, 10-year treasury used to pay 10, 11, 12% because that is what they used to pay. And all these insurance companies, they have float, a lot of float, like Warren Buffett, right? I mean, they have a lot of
Mhm.
float with premiums coming in. They need to invest it somewhere so that they can generate a yield, so that they can pay benefits and make profit for themselves, right? So they can't buy these 10-year treasuries anymore. Again, 10-year treasury is at 4% again, right? Recently it went up to 5, but now it's 4 again, right? So insurance companies mostly, and the pension funds and all that, they got smart and they say, you know what, I'm going to buy these apartment complexes in the nicest areas, and it has to be big enough. 300 units is the magic number.
Right.
If it's not 300, you get even filtered out, right? That is the problem. And these are the people who are not like very cost conscious. What they want is a nice asset. They think like these rental car companies, right? Herds or somebody. They need a sealed vehicle, right? Brand new one. And before it runs out of the warranty, they'll get rid of it, because
Right.
they can't get into repairing and all, no, I mean,
No.
liability and all that, right? So that is how these big institutions think. And I want to build institution kind of product, because they're always in the market and they're liquid. And that is a strategy. And that's why it has to be 300 units. It should be in one of the wealthiest areas of any given town, right? And there should be some kind of scarcity. So that is what drove me into the development thesis. And I always had an old timer as my partner. And I love these old timers who lived through 60s, 70s, 80s when things were super rough, because right now
Right.
everything is more or less, manageable, right?
Right.
Back then, it was bad. So I need somebody to floor my feet tight to the ground so that I don't, you know, inflate
That's it,
my
man.
expectations and all that. So I always take somebody who have like that. I make them a partner, and I need their experience, and they will sign on the loan. I will actually treat them as my partner, but I keep them. It just makes me feel comfortable and secure that somebody with that
Same,
kind of
dude.
experience. So that is
Same,
how
dude.
I got myself, and they know people, right? Like for suppose the Frisco downtown. I I shouldn't be building that, because no, they don't put these kind of land on MLS. This is like shake
Mm.
hand kind of a deal. And our Kyle deal, you wouldn't believe, my partner actually found the deal, this old timer, and he saw it somewhere or heard through somebody, and he said, you know what, actually worked together back in 70s. Can we have a lunch together? He called up and he said, okay. They went to lunch, and then they made a shake hand deal, and for 3 months he wouldn't put it under contract, and this is 2021 when things were super hard. And I was like, Mark, you got to put it under. It's like, no, we shake hand. It's like, I mean, like,
And he's
oh, you
like,
think
it
this
is under
someone's mean
contract,
something?
man.
Yeah, for 3 months he didn't put, and he didn't increase the rate or anything like that. That is how they used to work. And those are the kind of people who can help you to land these nice sites which you can find on MLS. Because remember,
Right.
right, it has to be a little special, little exclusive. So those are the kind of projects what are worth building for me. So that is what I strive for.
I love that, man. I love that. And these are the kind of conversations I can go on and on with because you're tapping in on all the main stuff. Real estate's a relationship business. It's not a mystery how to do this. People have been doing what we're doing for a long time. Go
Yep,
find people that have been doing it a long
absolutely.
time. Ask them. There's a reason my mentor is in his late 60s because I want to see what's around the bend. I want to understand what's up there. What's it look like? How'd you deal with stuff? It may be a new scenario that we deal with it in, but it's the same problems in essence. It's it's interest, it's business, it's all the same stuff, just a new environment. And their opinion matters, man. And like what you just nailed down, especially as we're in this transitionary period, there's a lot of wealth transitioning to a new generation where we're alive and having connections into it like you're talking about are what get you into deals that properties that'll never ever ever see the market. You're never going to see them. They're always going to trade behind the scenes
Yep.
because that's just how real estate works at high levels. It's a relationship game. No one cares that you're going to pay more. They care if you're going to close the actual deal,
Exactly.
and you need to prove you can do it, right?
Yep.
So, Venkat, man, you got a history of that. You're doing it. You're building it. I love it, man. I appreciate you being here on here with us today. So, for folks that are listening in and watching, and they're interested in learning about a project, learning more from you, what's the best way for them to find you?
So they can go to my website, Stryker, Stryker, prop, prop, like a property.com, strikerprop.com, or they can email me at Venkat, V as in Victor, Enkat, T as in Tango, Venkat at strikerprop.com.
Perfect, man. And if you're listening or watching, check our show notes. We'll have all Venkat's links there so that you can reach out to him. Like I say all the time, when you meet a professional that we bring on and they want to talk, if this is what you're into, reach out to them, touch base with them, learn from folks who are actively doing it because that's how you actually get good at real estate. So, Venkat, again, thanks for being with us today, man. I loved your conversation. I think we need more folks out there like yourself doing it. Just building something real in the industry. So, thanks again. Everybody watching along and listening, thanks for being with us today. If you got value out of today's episode, please like this episode, share it with someone else you think get value out of it. And if you aren't a subscriber yet, click that button. We appreciate every single one of you that follows along out there with us. We got more conversations coming up with operators just like Venkat out there building, again, a real business in the industry. Thanks for being with us. We'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.